Well, Empire Manufacturing is a big disappointment for those who were hoping for a rebound, down to negative 11.2 from 4.5. Retail sales just coming in now for November, down by 0.6%. October revised up to a 1.3% gain, so a little bit better there. Retail sales ex autos down negative 0.2%, and ex-autos and gas down negative 0.2%. The retail sales control group, just to round out the trilogy here, down negative 0.2%. However, that was revised lower for October to a positive 0.5% from positive 0.7%. So retail sales coming in weak here. Just a couple more numbers here today. Initial jobless claims come in at 211,000, a major drop from the 230 the week before. Continuing claims are at 1,671,000. That's the same as the prior week. Now, remember, those are delayed a week from the initial claims. We're still waiting for the Philly Fed numbers to come out, but while we're waiting for that, we'll take a look at what's going on in retail sales as John gives you the markets.
Session lows, Mike. Equities down by 1.2% on the S&P. Bizarre that we're having this conversation about recession, and you might say, well, look at retail sales, and I would say, look at jobless claims. 211,000, Tom, we're having this conversation about recession in America with jobless claims at 211.
And they're countable data, and they're weekly, and they're often, and they're going to have to look at that. I also know continuing claims pretty much flat with where we were last time. What I would suggest, John, is we go back to the heart of this, and Mike can pick up on this if we want to stay on this or go to ECB where there's some real market action. But the bottom line is the new study of choice is service sector X this and X that. I'll let you decide.
X whatever you like.
We're Xing out.
That's how the story is.
But there's a new, you have to have, if McKee's involved, you have to have a new measure involved.
Yields just a little bit higher at the front end still on a 2-year to 4.23. Looking at the 10-year, basically unchanged at 4.48. So you've got a little bit more curve inversion here. We're negative, I think, Lisa, let's call it negative 75.
This is incredibly confusing data. I'm looking at this right now, and to your point, you can paint one story if you look at retail sales. You can point to another if you look at the jobless claims. The big question is just how sticky this is. And Mike, before we get back to the ECB and that really a market-moving statement, I'm curious from your perspective, is there a trend here in retail sales that suggests that consumers are flat on their backs and they're pushing back and they're not buying as much because of their negative real wages?
Well, in general, it looks like goods were suffered during this. Now, the retail sales numbers only include one services industry, and that's food services and drinking places, and that was up almost 1%. So people were spending on services. Now, the interesting thing about the retail sales is it's always heavily revised because it really only covers the first part of the month. So either we moved some holiday sales into October, or people are delaying getting on with it and getting their stuff because we see department stores and clothing stores down 0.2%, department stores down 3%. So I don't know where people are going to get their Christmas presents from, but even non-store retailers, which would include your Amazons and Walmarts,
some of us don't start our Christmas
down
presents